Well, thank you everyone for allowing me to come on here. My experience with blockchain technology, my background is that I'm a lawyer by profession, but I studied software engineering prior to going into law. So that has given me a bit more of an advantage over the standard lawyers you would come across because it gave me a better understanding of how the technology works in terms of the mechanics of software and its design and use. So I have been working in financial technologies sector for a while now. I first encountered blockchain technology through when Bitcoin network launched. At the beginning, I wasn't very much. I could see that the idea was noble and it was workable, but I didn't know whether it would really become a big deal. So when Bitcoin launched in 2009 and the network started off and it got implemented by unknown persons because they didn't want to be known who they are. It then grew at a phenomenal rate. It was a huge success. It's been in existence since then, and the network, the Bitcoin network, has never been hacked. So, which is one of the advantages which most people see in this technology. So yeah, that is basically how I ended up falling into this. I had read the white paper, I believed in it, but I wasn't very sure about whether I would want to put money in it until around 2011 when I went back again and looked at it. And by that point, a lot of things had happened, which were quite, assuring in terms of the direction in which this market was moving. Other small cryptocurrencies were launching at that time, and some of them have grown to become big networks like Ethereum. So I experienced it initially on a personal level, and then on a professional level, advising startups which are building around this technology because there are some legal problems which they face when they try to test it on the market or actually scale it to become bigger. That's basically where I come from. Some of the technologies now are being used using bank cards like on Visa network and on MasterCard. So it's grown to become quite a big network. So in a nutshell, that's where I come from the coding background, now working mainly in with financial technology developers and projects which are trying to deploy their solutions in the market. Also, in terms of my involvement with the Reserve Bank of Zimbabwe, they started off in 2018, yeah, which is 3 years ago now. I was one of the first people, I believe, to create a digital asset in Zimbabwe. Mine was called Vic4's Coin. It was aimed at promoting the tourism sector. I will share an article from Business Weekly of when their coverage when we launched this asset. But from there, it was engagement as an entrepreneur. But then when I found out that nothing was going to work out because at the same time, that's when the ban for the banking sector from getting involved in cryptocurrencies came in. So I ended up having to kind of shelve the project because it relied on businesses adopting the token and then giving offers to token holders. So because of that ban, businesses were not prepared to do it. because they were worried about the impact that would have on their business. So that's how it started off. And then I suggested a regulatory sandbox because that is how these technologies have been getting regulated in developed countries. So I thought it would be a good idea to have something similar. But this took a while for it to come to fruition. I then was able to I reviewed the sandbox before it went live because initially the belief was that it was going to include cryptocurrencies, but when by the time it launched, even though the draft which we had worked on had allowed cryptocurrencies, by the time this got launched, cryptocurrencies and central bank digital currencies had been excluded explicitly, which meant there was no appetite for the government to go down this route. I'm not sure what happened when it got to the point of publication, but it was a bit unusual because I had expected this was the whole point of the sandbox, because I had been one of the people who had been pursuing the Reserve Bank for a long time concerning cryptocurrencies, and I had actually had it in writing that the sandbox would allow cryptocurrencies. So yeah, it was a bit of a shocker for me. Currently, I'm mainly influencing policy making. You'll see the research paper which we wrote, me and other people interested in this technology, other experts who've experienced these technologies either in their personal or professional capacity. We came together to write that paper. And before the paper, though, I wrote the Zimbabwe Blockchain Technology and Digital Assets Business Bill. The intention was for me to push it as a private bill, and we are working with other people who are in parliament to try and pursue this route, because we think it will take government a longer period of time if they were to prepare the legislation and push it forward, because it's quite a complicated area which is moving very, very fast. And it requires immediate attention. So the private bill is the main way we think, if it's adopted, then these technologies will be allowed in the market, and maybe the ban by the Reserve Bank can be lifted through Parliament, as Parliament can make decisions on whatever laws they want to pass. So at the moment, yeah, I wouldn't say I'm working with the Reserve Bank, but I do speak to the governors. I correspond with them by email. Like that research paper, it's reached them. They've already acknowledged that they have it, and they are looking at it. I'm still mainly involved from outside, not from inside. So I'm not sure what the policy position right now is, but I'm hoping that they will see how this sector is growing outside Zimbabwe, and maybe they will look at ways of allowing it in the market. So yeah, that's mainly, I think, what I can say about my involvement with the RBZ. On a global scale, I think blockchain technologies are becoming a big deal. The impact which they will have is being compared to the impact which the internet had. With the payments element of it, I think it's actually really big, and it's more beneficial for us in Zimbabwe, especially in the context of some challenges which businesses face due to the sanctions issues. Because the payments network, if you try to pay someone outside Zimbabwe, it's a bit of a nightmare, because most institutions globally, they exclude Zimbabwe because they don't want the risk which comes with maybe breaching sanctions. So I think globally this technology is now on good footing. We've seen in the early part of last year, the US has actually come out with some good policies, especially the controller of the currency, who is the regulator for the banking sector in the US. They've issued some guidance which allows US banks to custody cryptocurrencies in the same way they custody our money and other assets. So to me, that was a big watershed moment, because if you see banking sector being allowed to get involved in this emerging technology and actually being enabled to custody it, it shows acceptance of the technology, and also from that guidance, it developed into another follow-up big policy move, which allowed cryptocurrency fintech companies to be able to convert into federal banks. So now in the US, if you are a crypto company, you can apply for a bank charter and you can operate as a bank, but a digital assets bank. One such company is Kraken Cryptocurrency Exchange, which converted into a bank in Wyoming. They are now fully licensed as a bank. So for if you see developments like this, it shows that this technology is not going to go anywhere. After that, there have been other many. I think in the US currently they have probably 4 or 5 fintechs which are based on blockchain technology and cryptocurrencies, and they are all now licensed as banks. So that was a huge watershed moment, and immediately after that, that's where you saw Tesla buying 1.5 billion worth of Bitcoin, and you had MicroStrategy. So a lot of public traded companies in the US now are actually holding Bitcoin on their balance sheet. And there are more things which are happening now. You've seen PayPal. PayPal now allows people to pay with crypto or be paid in crypto. So it's becoming a really big part of the US economy. It's growing very, very fast. And you know what normally happens if regulation is friendly in the US, then normally the technology ends up being exported everywhere else. China has taken a bit of a different approach. They don't want cryptocurrencies, but they deployed a central bank digital currency, which is called the DCEP, and it's using the same blockchain technology. It's an adaptation of Bitcoin, but for central banking. So those kind of developments shows you the direction where this technology is taking. China has made it their key technology. It's a key strategy area for the digital strategy for China, which was announced by the Chinese president. So it is emerging. It is growing very fast. It's getting adopted in most places, but it's different. It's kind of a different picture. Some places have been hesitant because it came off on the basis of removing the establishment. That philosophy scared most of the establishments until they took a close look at it, and then they realized, well, it's not really a threat, but it can also be a big opportunity. So I think it is a big deal. I think it's an area where it actually requires targeted policies. It requires well considered strategies to make sure that these technologies are used and we get the full benefit of them. So, in terms of blockchain technology and what it is, uh, all it is a distributed ledger. You think of the ledger which your accountant uses for to record debits and credits, but this one is digital. It's not based in one location. it's distributed across the network, which is the other reason why they call it distributed ledger technology. So you have every computer on the network holding a piece of information on that ledger, which then means it becomes difficult to compromise the network because you need to compromise all the players in the network. The first use case was Bitcoin. With Bitcoin, it solved the problem of double spending. So if you think about it, if you were to pay me using digital money, which is not based on Visa or MasterCard network, you would struggle to know whether I've already used that unit of payment to pay the next person. You wouldn't be able to verify it. So, with the implementation of this technology, it ensured that every computer on the network stores that piece of information. No one can go back and change it, or no one can hack into it. So that means the data, once it's written on the blockchain, it's there and it can't be changed. So with Bitcoin, they made the code, they wrote the code in a way that there will only ever be 21 million units of Bitcoin in circulation. At the moment, it's 18 million new Bitcoins come into circulation through a process called mining. That means your computer solves a complex mathematical problem, and when it does that, it gets rewarded in Bitcoin. And once that happens, the network broadcasts that the transaction has happened, and that means it becomes a permanent record. And anyone can search the record. They can't amend it. They can search it and view it and see all the transactions that's happened, but they can't know the parties who are involved in the transaction. Most people think it's anonymous, but no, it's not anonymous. It's simply pseudonymous. You don't know who the parties are, but if you make an effort to find out, there's possibility that you could find them. So it's the way their privacy is preserved. Otherwise, you wouldn't want all the names written on the blockchain permanently of who is owning what. So it's kind of a good mechanism for privacy. So when the Bitcoin network was deployed, and it was a big success, other networks have been created which have different functionalities. And this is how blockchain technology is emerging to be huge, because there are various applications you can make to it. Ethereum is quite interesting in that they have smart contracts on there. Smart contracts are self-executing, so it's like your lawyer's contract, but written in code. You don't have to enforce it, because if people don't perform what they are supposed to do, the contract is not going to execute. So it's become quite fundamental. But on top of these networks now, people are also building applications like data management systems. You can have your digital identities on the blockchain because it uses what is called cryptography. So with cryptography, once something has been encrypted using cryptography, it becomes safer. So your wallet, for example, where you keep your bitcoins, if you have a private key and a public key. The public key is what you give to someone. It's a series of numbers which don't make sense, but it actually is unique to you. So if you give that to someone, it's issued on the network. If it's on Bitcoin blockchain, then that becomes like your account number on Bitcoin blockchain. Someone can send you Bitcoin on that wallet address and you will receive it. And all they need to do is to simply initiate from their own wallet. And with that wallet technology, the private keys are what you use to move the assets. So if you don't have the private keys, you can't move the assets. So that is one key thing which makes it difficult for law enforcement agencies to seize Bitcoin from you, because they will need those private keys to be able to move the assets. and if they don't have them, then they can't move them. That is a key advantage, because it means you have security of your assets. You don't have to trust someone to keep them for you. You keep them for yourself. You have your private keys. There's no risk that someone is going to disappear with them. So that is the most groundbreaking, I think, thing about digital currencies. But beyond digital currencies, this technology is being used to automate some of the processes for our day-to-day activities. Because of the security it offers, things like land records are being managed using blockchain technology, because it's transparent, anyone can search. It's immutable. Once it's written, it can be unwritten. So if you have records for your property on there, that means someone can't then change them. Someone can't sell something which they say they own when they don't own it, because it's all available on the blockchain. It also helps with making data tamper proof, like educational certificates, for example. Once you have the data written on the blockchain, people can't claim that they have a qualification which they don't have, because someone can simply go search and find out whether they actually have that qualification and whether they attended that university. And that means also you can't have someone physically going and changing the records, because they've already been written on the blockchain. So, apart from financial services where it's actually making the most waves, there are actually uses which are outside finance and banking, which are more fundamental and more bigger for exploration. And you can think of other things like voting systems in Russia. They voted using blockchain technology because it brings efficiencies, like you don't need to count the votes, because the blockchain keeps the record and it will tally the results for you. You can't change the results once they've been tallied. So long as you make the onboarding system efficient, then and accurate, then you are going to have an accurate outcome of what people have voted for. So quite fundamental, but still, requiring more exploration and more development. I would think it will be more groundbreaking if some of these technologies are able to be tested on the market and are actually used. Well, so one of the most interesting innovations out of this technology is stable coins. So your stable coins are like they're backed by either commodities or backed by actual currencies like US dollar. Like at the moment, one of the biggest ones is USDT, which is called Tether. It's got billions in the market of tokens now. So businesses can take advantage of these stable coins because they are based on the blockchain. So long as you can move your assets from physical onto the blockchain, then you'll be fine. And the benefits of these is that once you have your assets in your wallet, then you've got full control of them. You can invest them, you can do whatever you want with them without anyone interfering. You can use them in what is called decentralized finance, which is a big emerging area where you are able to do loans, you can borrow, you can lend yourself and get money from the interest. So rather than the bank being the one lending, you can lend and earn interest. And all these rules are enforced by those smart contracts, which we mentioned earlier on, because the smart contracts ensure that you are paid. No one can change the rules, because once the rules are written in the smart contract, that's it. So there's lending, there's stacking, which is being a big deal now. You can stack your coins on the blockchain, and once you are stacking them, they can earn you more interest because Bitcoin used proof of work, which is your computer solving complex problems and getting rewarded in Bitcoin. But the new emerging systems are using what is called proof of stake. So you are showing that you are a participant, you are a holder of the coins in order to help secure the network. So you are like staking your coins like you would do. The easiest thing is to look at it like if you have many coins, you stack them on there, and by stacking them, you've shown proof. You are stacking them digitally rather than physically, and you are showing the proof that you own coins on the network, so you are a trusted party to secure the network. So for doing that, you get paid a reward, and those rewards are paid in the currency of the network you are using. So I'll give an example of Ethereum. If you stack your Ethereum on Ethereum network, at the moment it's still transitioning from proof of work to proof of stack. If you stack them, you get a reward, you get more Ethereum. So you get your investments grow by simply holding them on the network and being a participant in securing, in validating the network transactions. So this is a huge opportunity for businesses because most banks, even in US and in the UK, the interest rates have gone really low. Excuse me. It's quite difficult for you to get any real interest on your money. Some of them are actually charging you for keeping your money in your bank account. So these technologies are enabling people to still make money because that's how the ecosystem works. That's how it's been designed. You can still make money even when the banks are struggling because your money you are making from securing the network by enabling transactions to happen on the network. So I think there's a lot of potential on there. And with hyperinflation, if you are using stable coins, then you are cushioned against inflation. And because of the mistrust which people have with the banking sector, most people would rather keep their money under their pillow or apologies, that one got cut off because I had a call coming in. So, yeah, some people rather than putting their money in the bank, they would rather keep their coins, or they would rather keep their money under their bed because they are concerned. They're concerned that they can end up, losing the money if they put it in a bank account. So because of that, you would rather have something which you have full control of, and that's what blockchain technology does. It removes intermediaries. You don't need the bank to keep your money. You can keep your money yourself. You simply need to move your assets onto the blockchain. Then you can realize all these other technologies which you can play with online. You are not limited by geography. You can access markets which are global whilst you are based in Zimbabwe, which is a good thing. I do think there is a huge opportunity for local businesses on there. There is also the issue of central bank digital currencies, which is going on now. But I think the local developers could have a token or a cryptocurrency which is backed by resources or commodities like gold. If you have a gold backed cryptocurrency, then it's not going to be as volatile as the other assets which are not backed by anything. And I think it could free up a lot of foreign currency for other things, for paying, suppliers abroad. Uh, Instead of people keeping US dollars because they are scared their money will lose value if they hold the local currency. You create a gold-backed token, gold-backed cryptocurrency, and people can use that to transact locally. And it will be redeemable for the value of gold. So that way it can reassure the market and maybe minimize the impact which inflation is having on everyone. So I do think that there are a lot of opportunities for businesses, and the other opportunities are actually in using the technology, like the ID solutions which I mentioned before, land records. The power which ID solutions can open in the market can be really big, because if people can verify who you are, it means it becomes easy to borrow. If you have land and you also have ID, which is based online, that means someone can link you to your land and they'll be able to give you collateral. You can do things like farming, unlock the money from your land and do farming, and then pay back the loan and get the collateral, the charge removed once you've paid. So those kind of things, they can really grow the economy and make it bigger. So I think those are some of the benefits which local businesses could have if these technologies are allowed on the market. Oh, so the main blockchain applications do not require any changes in regulation, like the identity solutions and the land records and stuff like that. They may not require a lot of work. You could have developers working and deploying them on the market straight away, but the ones which affect financial services are the ones which have been a big topic globally. Bitcoin, at the moment, Bitcoin is regarded as a commodity, so it's being treated like gold. Some liken it to gold. They actually say it's digital gold. But there are still issues around money laundering, because the value of Bitcoin has gone up a lot. I think it went up this week to a high of $67,000 per Bitcoin. So you can see that there's a lot of value now created. If you had bought Bitcoin, say in the past 3 4 years, you would have probably, well, I remember very well that it went to as low as 2000 in 2019. So you could have spent $2,000, bought one Bitcoin. Today its value 60,000. The market has grown exponentially. Last year, at the beginning of last year, it was only around just over 300 billion. Today it sits on about, today it hit a high of 2.7 trillion. So with this growth, it's raising eyebrows globally in terms of whether there could be money laundering involving these assets. Some countries with sanctions like the US are worried that it can be used to bypass the sanctions they have in place. That means for the financial sector, it's become a requirement that most of the companies which take part in this sector, they comply with money laundering laws, but mainly that's as far as it goes. But at the moment in Zimbabwe, because there is a ban for the banking sector, you can only transfer Bitcoin peer to peer, which is from meeting someone and sending it to them in their wallet. That is not illegal at the moment. And hopefully the banking sector can open, because this is where there is going to be a lot of benefit to be had on a national scale. In the US, in the first half of this year alone, 4.4 billion was invested in blockchain technology companies, mostly cryptocurrency businesses. They are deploying various solutions in the market, and they are getting a lot of money coming through, because 4.4 billion in just the first half is quite a significant amount for a small sector like this. It's only over 2.7 trillion. But if they are having that level of investment, that means they know how important this technology is. So there is a need for policies in Zimbabwe right now. and I think it's really a matter of urgency, because as these technologies start to grow and become big, it becomes more expensive to adopt. And also it means you are becoming you are adopting the top technology near the top of the market, which means you are not going to even realize much gain as you could have if you had gone in earlier. We've been having these discussions a while ago. I remember meeting one of the RBZ governors and advising them to have exposure in Bitcoin as a reserve for the country. But I don't know whether that went anywhere. But they were going to look at it, but it never got anywhere, I don't think. Or maybe if they did, it remained a secret. But I think there is a lot of benefit in adopting these technologies. It could grow, it could bring in a lot of investment from outside, it could grow the local economy. It's a huge ecosystem. And it's truly amazing how it's grown in such a short time. Most places now, they're actually they're doing policies which encourage startups to come and build within their borders, because they know if these technologies are built locally, like when these coins were being issued, like the craze for initial coin offerings, any country where these projects were based, where they were creating these tokens from, they were generating wealth from there. There's one big project called Matic, which is from India. They built this technology from India, and it's now worth billions. It scales Ethereum at the moment. So you are having companies built locally, becoming worth billions within a short space of time, which you wouldn't be able to do if you were to build your company in Zimbabwe with no decentralized technologies involved. You wouldn't have that much of a reach. And one of the areas which is being disrupted more is artists' rights. Like if you've heard of non-fungible tokens, which are like a representation of your art, but on the blockchain, fetching millions. Some of the images. I know a few artists from Zimbabwe right now, which are making a lot of NFTs. They are making a lot of money from it. Some selling for as high as $8,000 per NFT. So it's a big economy. Artists can, issue make their albums and release them on the blockchain as an NFT, and protect their rights in the music, and they get paid on the blockchain because the smart contracts enforce the rules. So there's really a requirement for good policy making and probably legislation to promote this area to grow, so that we can realize the full potential these technologies can bring. In terms of African countries which have adopted these technologies, I know Kenya is quite ahead. They've got a sandbox. Their sandbox is quite nice. It's probably better than the one which we've had in Zimbabwe from RBZ. They've included everything, so there are no exclusions in there. Anyone can approach the financial markets regulator in Kenya, and you can pitch your project, and you can get the clearance to launch it with the assistance or with the guidance of the regulators. So yeah, Kenya has adopted very well. Nigeria is one of the countries with the biggest volumes, but sadly they went the wrong turn. They've taken the same approach taken by RBZ, where they've said the banks can't be involved. But for Nigeria, it's been interesting because when that ban set in, the volumes of Bitcoin went really high. And I think at some point they reached a volume of 40 million in a month after the ban, which shows that this section is still very active. and are still very much alive. But the government is losing revenue because they can't tax it now because most of the people are doing peer-to-peer transactions. But I think South Africa is taking the lead at the moment. They're getting a lot of investment coming in from various companies. Luno, which is one of the big exchanges based in South Africa for cryptocurrencies, it's owned by one of the biggest companies from the US. They own a big stake in it. They are called the Digital Currencies Group. They also own Grayscale, which is one of the biggest crypto funds in the US. South Africa has taken a big lead, and I think we need to learn lessons from there because this sector has grown really big in South Africa. They've also managed to have the capability to develop a digital currency. They've tested their digital currency for the central bank under a project called Coca, which was a very interesting development. And they've done this, years ago. I think it happened 2 years ago. So they've already done a pilot on it. They've got the data. They allowed their startups to build on the technology locally, which means they've had the capacity because most of the developers are based locally and they understand the technology. They also have a sandbox which is allowing cryptocurrencies as well. I know one project which is very promising, which is enabling bill payments, buying groceries in shops, and doing all other things you can do with cryptocurrencies, but under regulatory oversight. So they are flourishing. Their fintech sector has grown so well, and they're experimenting with it. So I think those are the countries to copy from, but not from Nigeria. Nigeria's problem is different. Nigeria is a big economy. Their volumes were 40 million in a month. They have a bigger problem than most African countries would have. But I still think they've gone about it the wrong way, because if countries like the US and the UK and even Singapore, they have good policies to enable these technologies to flourish. So I don't see why African countries should take the hard line on this, because there is a big risk with China launching its digital currency. Most African countries could end up becoming satellite, states of China, because once your citizens are able to access the Chinese digital currency easily, then you've got a problem, because it could become more accessible than our local currency, and it will be more stronger and more stable than our local currency. So if you don't have a digital variation of our local currency, then you are running a big risk there, that people will be buying easily goods from China. The local market will get flooded with Chinese goods. Local producers, local manufacturers are not are not going to be able to compete, because there is high manufacturing in China. They do mass manufacturing, so competing with those Chinese companies is not going to be easy. And at the same time, the infrastructure will be there for people to buy these goods easily. It is something for our national policymakers to think about, because there is a real risk there. I don't think policymakers are looking at it from that perspective. But the Chinese digital currency, it's what is motivating all these other countries everywhere else to have a digital currency, because your currency will get eclipsed. There are serious risks which will come with one country having a digital currency and neighboring countries not having one. And Nigeria have woken up to that risk, which is why they are at advanced stages, almost launching their Nigerian naira as a digital currency. In terms of confidence in the banks, I think this is now a global issue, though our problem is probably much deeper. and it's been protracted over a longer period of time. But banks globally are being criticized for especially central banks with the printing of money, which is diluting the value of the money in circulation. They say 40% of the US dollars in circulation now were printed in the past 12 to 14 months, which means which is the reason why there's high inflation in the US now. The last time it was recorded, I remember it was said to be around 4% annually. So this is the problem, and this is the reason why decentralized cryptocurrencies like Bitcoin are becoming more popular. You are seeing companies like Tesla, who would otherwise have millions sitting in US dollars or billions, they're deciding to put this money to work. So they're buying cryptocurrencies. They've bought Bitcoin because it's got fixed supply. 21 million units would be the hard cap. So they see their value getting preserved better in these decentralized cryptocurrencies because of the fixed supply, rather than keeping them in cash or putting them anywhere else. They already have good exposure in other assets. So, getting confidence in central banks again is going to be a big problem, or even in banks in general. I think this is where these decentralized finance, decentralized financial technologies come in. You'll be able to leverage the technology without requiring an intermediary. You can do and manage your investments on your own. And if you want to use banking services, you can still do. But if you have an option like this is what is helping. But there are other ways I think central banks can improve public perception. And I think the central bank digital currencies can be a good thing. If, say, for example, the Reserve Bank of Zimbabwe issued their currency as a digital currency, it means when they increase supply, it can be seen because blockchains are transparent. If they adopt a public blockchain, public can see that they've created money, and they will ask why more money is being created and what it's being used for. They can hold them to account, and they can also hold to account the various ministries, because if it becomes publicly available that the Minister of Agriculture, for example, has been allocated a lot of money in command agriculture, they will see that the money is being used, but nothing is happening. They will see the money moving. They will be able to challenge and to hold the institutions accountable. So I do think that central bank digital currencies go a long way in trying to bring the trust back. But I don't think alone they will do the job. It needs to be followed through with good economic policies which enable the prosperity of the country. I also think that the downside of these central bank digital currencies is that once the information is available easily to authorities, it could also undermine privacy. It means anyone can, at the central bank or in a bank, could check how much you have, because they know your name. Your wallets are linked to your name, which the bank knows. They can easily tell who you are and how much money you have, which may be a bad thing in terms of privacy. And it can also be subject to abuse, that information, because if they are able to have programmable money, which they can click a button and stop from moving, or unclick a button to make it go where they want it to go, that can be also a dangerous thing, especially when you look at civil rights society, human rights activists. They could easily end up being unable to use the financial services infrastructure because they can easily get targeted by parties who may have access to this information, especially in the government. So it requires a considered approach if done with good intentions, and it preserves good privacy. If it's based on good governance principles, it can work, and it can actually increase financial inclusion, because once you have these central bank digital currencies, someone doesn't need to pay money to maintain a bank account. They will simply have a wallet. They will not need, it will really help those who may not be able to use financial services right now. They can have better access. But also, you don't want to forget those in the rural areas who may not be able to access these systems because they don't have access to the internet. But I hear Ghana, they're developing their central bank digital currency in a way that it can be accessed offline. So this technology is out there. It can be used. It can be adapted to suit the needs of every local economy. It just requires foresight and use of initiative to start researching it first, and learn about it, understand it better, and then lead to maybe implementation, which is deliberate and targeted. I've got no information on the CBDC by RBZ. Uh, I was involved on a financial markets in Daba where there was a representative from RBZ. They said they are not actively looking to deploy a CBDC. I don't know whether their position has changed. I'm talking of 2 3 months ago. I haven't had any difference, any different since then. They were saying they at the moment do not think there's a requirement for it. I differ to think, but that is their position, and I'm not sure how much research they've done on it. But I'm aware South Africa and 3 or 4 more countries are involved with the Bank of International Settlements. They're testing a central bank digital currency which goes across borders. I'm not sure how far they've gone with that, but that's what other countries are doing. Central bank digital currencies are a huge thing now. The UK is currently researching a CBDC. They think they will deploy one in the future. The same with the US. The European Union, the European Central Bank announced a few months ago that they are actually actively, developing or researching it. It is something worth looking at, but I don't have any idea what the RBZ is doing in terms of the CBDC, or whether they even have any intentions to deploy it. But the last time I had one of their representatives comment, they said they do not plan to deploy one because they don't think they need one. Well, on this point, I think African countries, move from proof of work to proof of stake. I think it's mainly to do with the efficiencies which can come with proof of stake as opposed to proof of work, and also proof of work, which Bitcoin uses, has been criticized for wasting energy. So they're trying to adopt more energy efficient systems. I actually think that proof of stake could work well for African economies, because in Zimbabwe, for example, we can't use proof of work because we will be eating up our supply for energy for other uses. We already have a crisis for energy, and having proof of work will worsen the situation. So I think in Zimbabwe, we could commission a blockchain network, which is bespoke, built locally, which is intended to maybe host the digital currency for the central bank, and any other project, like companies like Econet could have tokens on that blockchain, which are used for paying for airtime and things like that. And you could have DApps, decentralized applications built on top of a national blockchain commissioned by the government. You can develop skills, locally for developers to build solutions on that blockchain, and you could achieve a lot, quite a lot, because it's not complicated. Ethereum started off by a young 23, 24 year old back then. Vitalik Buterin is the name. Now Ethereum is valued over 400 billion. So it's grown to a big network, starting off from just a young man. So there's definitely capacity to do this, but because we banned these technologies on a commercial level, we are not having anything, because no one is investing in. People are scared if they invest. Tomorrow, you wake up and the technology is banned completely, and you've just lost your money. So it's making the market uncertain. There's a real potential for African governments to build these infrastructure or to build these networks. They should look at them as infrastructure, because that's what blockchains are. They are infrastructure. They are platforms where you can do various things. You just need to have more creators, be more creative about its use. We've been talking about arts, NFT artists, painting their art and putting it on the blockchain and selling it globally. There are various other applications for it. You can have, I've heard of an application for life assurance where you can set up a smart contract linked to the Registrar General's office. You have a life assurance policy, you die, the issuing of the death certificate by the Registrar General triggers the smart contract, and a payment is made to a beneficiary who was named in the policy. So, simple applications like that, they can add a lot of value and automate a lot of things which we otherwise would do manually, and it can make things more efficient. So I think there's still opportunity there, plenty of opportunity to get in now. But now, unlike previously, most projects were begging countries to adopt their technologies. Now they've got to a point where they are not begging anyone anymore. You end up having to pay them in order to deploy this technology which they are making, because they've already become big. Whereas if you were early adopters, they would allow you to adopt for free, because they want adoption as well, because that's what makes their networks bigger and more secure. So there's still opportunity. We haven't lost it all, but we are getting a bit late. Well, in terms of volatility, I take that you are referring to the assets, the tokens, because that's the side of blockchain technology with volatility. The other ones, the applications, like digital identity and all that, they're just as stable. But with cryptocurrencies, it's the nature of the beast. Volatility is how they are, designed. It's because they are still new assets. You have world population trying to buy the same thing, and at the same time, some people trying to sell. It's very sensitive to news of regulation, especially if it's negative regulation. We've seen China cracking down on Bitcoin mining earlier this year, causing the market to shed about 50% of its value, from over 60,000 going down to around 30,000. So, people, those are the habits of, inexperienced investors. They run away when the market is going down, and they come back when the market is going up. So I think volatility, it's well known. There are ways of taming volatility. You can buy by dollar cost averaging, buy small units slowly over a longer period of time. In terms of Bitcoin volatility, it's known to have delivered at least 200% gains every year when compounded, despite the volatility. So if you are buying over the short term and trying to sell over a short period of time, they are not suitable investments. But if you are looking for the long term, that volatility becomes nothing, because if you had bought Bitcoin this time, or early last year, it's now trading at over 60,000 today. So you would have bought it around 4,000, 5,000, some 10,000. But over a year, it doesn't matter, because the value goes up and down. So long as you don't sell, you're not going to lose money. So I don't think the volatility will go. I don't think it's a big problem. I only think that people need to understand why they are buying the assets, and look at holding over a longer period of time. Unless you know exactly what you are doing, then you may want to not try to do short-term trades. Yeah, on the new head of the U.S. Securities and Exchanges Commission, yeah, he was a lecturer. He taught blockchain and cryptocurrencies. He understands the technology better. But currently, their policies, when he went into regulation, have not been seen as positive as people had expected. They've been talking about clamping down on most projects, because they think they represent equities, and they should have been registered as securities. So there's a big debate going on in the US. Some are arguing that they shouldn't be regulated as in the same way as the market for equities is regulated. They need new regulation. At the moment, it's a bit of a mess. Nobody really knows what the US will do. But I think the central bank digital currency, they are pushing that forward. I think it's the US Treasury Department which is driving that, because it's their kind of area. I think the CBDC will happen because they will want to compete with China. I still think, Bitcoin, they've gone a long way to allow it, because it's considered a commodity. They've dual regulation in the US. You've got commodities regulated by the CFTC, and you've got securities regulated by SEC, the Securities and Exchanges Commission, which is like similar to our own SEC in Zimbabwe. They are regulators. Their main concern is protecting the public. They have to be seen to be doing something to clamp down on, all the scams which come up in crypto. I think, US have already gone a big distance in terms of permitting these technologies. Most of the mining hash power is migrated from China after the clampdown. Most of it has gone to America, so they are quite accommodative of it. I don't think they will ban it. This week, the US approved an exchange traded fund, which is an ETF for Bitcoin, the first one ever in the US. That in itself shows you that this market is having structure and it's getting rooted, because once they have these products like ETFs, if they are to ban Bitcoin, which is what the ETF is based on, though it's a futures ETF, they are going to cause their local businesses losses. So I can't see the US ban crypto. I think it's gone too far for a ban. I think big companies being involved in this is a positive thing. It will enable growth. In terms of advising the Zimbabwean Treasury to buy Bitcoin or crypto, I've been saying this for a long time. I think I've mentioned it before. I've met one of the RBZ governors. Bitcoin was still trading around 2,000 back then. And I was telling them that, you need to think of allocating some of your national reserves in Bitcoin, because it's the technology for the future. It will grow. But back then, you sounded like someone who is crazy if you were saying things like that. Maybe I scared them off. Maybe they went and they did something about it. But there we are. A few years down the line, Bitcoin above 60,000. If you had put 2,000 in there, you would have grown it 30 times to 60,000. Uh, it's insane. A lot of wealth has been created. A lot of transfer of wealth has happened from companies in the US buying Bitcoin. If you are a reserve somewhere, a national reserve holding Bitcoin, that is wealth directly getting transferred from the US into your pockets, because you see your reserves go up. If that had been done, maybe we wouldn't be complaining about the country being, not having money, because that money would have been created, and we would have sold, and sold for cash. So I would advise them to do it again. I would advise them today to do it, because this is only the beginning. But whether someone will listen to that or not, that is a different thing. But I think this asset class, it's a new asset class, and it's now well founded, now well established. It's well on its way to become, well, I wouldn't say to become mainstream, because when you see things like ETFs being developed, that means an asset has already gone mainstream. So it's something that needs to be looked into, and maybe the country should have some exposure in Bitcoin, because I suspect a lot of governments now have exposure in Bitcoin. I hear the Chinese government holds some Bitcoin, but it's unverified. So, yeah, that's a story for another day.